Welcome back, everybody. My name is Jeremy Grant, and I'm delighted to moderate this Exchange Leaders panel. And I'm going to ask my panelists to come on stage one by one, so you can get a good look at them. My first victim, no, I'm joking, is Philip Becker of Expert Partners. He's an expert partner at Bain & Company, the consulting firm. So welcome, Philip. Next up, next panelist is Christoph Hock, who's head of multi-asset trading at Union Investment. Welcome, Christoph. And please pay close attention to the footwear that Christoph is wearing, mixing it up very nicely. Next is Roland Chai, who's EVP and head of marketplace technology at NASDAQ. Welcome, Roland. And second to last, Rochak Lamba, who is head of innovation for financial services North America, Google Cloud. And last but very much not least, Michael Peters, the CEO of Eurex. Thank you. So this is particularly, I just want to say a few words at the beginning of this, because if you look at the sponsor board above here, you will see many blue chip names, of course, but you will see one which I have not been used to seeing on exchange panels at exchange events like this, whether it's the FIA event in Boca or IDX in London or wherever else, all the other conferences. You usually see the usual suspects, the exchange groups, the banks, the technology providers. You used to see hedge funds, but somehow they went away, or not went away, but crypto guys, they're thin on the ground. But what I'm trying to get at is that you've got a big new player in the scene here, and it's no accident that we have Michael and Rochak sitting here on the same panel, which makes it particularly exciting because we have a lot to discuss in terms of what big tech brings to the exchange business. Now, we're going to split this into four, roughly. So we're going to start with the meaty topic of big tech and the exchange space, and particularly data and the cloud. Then we'll move on to AI and machine learning, which is somewhat related. We move quite seamlessly, I think, into AI and machine learning. Then we cannot avoid, I think, talking about digital assets and blockchain, particularly given what's happened with the crypto winter and so forth. And then finally, we'll talk about the big threat, actually, to all of that, really, in many ways, which is cybersecurity or cyber attacks and what you do about it. So it's quite a lot to pack in, and we'll have a Q&A at the end. So let's get started. So I would love to hear from, actually, Michael, if you can kick this off for us in terms of the cloud and moving into the cloud. We had, of course, the strategic partnership announced last month only, February 2023, between Deutsche Börse and Google Cloud to enhance, economize, and concentrate DB's cloud adoption. What's the high level, what does the cloud mean for you? What does it enable you to do in high level? Michael, sorry.
So I think, first of all, we are very pleased that we entered into the partnership with Google Cloud. And I think there were different drivers where we have, I think simply joined forces. Number one is, when you look at the point of departure of Deutsche Börse Group, of course, we had a multi-cloud provider strategy already. I mean, as almost every company. I mean, you have put certain things into the cloud, which is simply qualifying whether this is part of your kind of operational system that you need on a daily basis, software development areas, whether this is things like MS Teams and these type of things. I mean, that is all known. And now we have Google Cloud, who will be our preferred partner in the future. So we have a very close relationship to them, or will have a very close relationship to them. And I think we will also benefit from the fact that Google Cloud had also announced a partnership with CME. So you have already a partner that is working together with an exchange, clearing and risk management operator. So our strategic goals are, first of all, what kind of areas do we have that can be qualifying to be entered into the cloud? Some of them I mentioned: software development area, simulation environment, and probably also other infrastructure areas that we have identified and are in the process to identify. Number two, there are areas that we will jointly develop with regards to digital assets, with regards to tokenization, and that is, I mean, simply the new area. It's not a kind of transfer from existing providers to Google Cloud. And I would also like to mention what will not be part of it according to our understanding, and that is the core infrastructure that is low latency sensitive, meaning the trading system. What I think would also really fits from our perspective is that in Europe and in this context, regulation is actually great and will be great, that the European DORA regulation, which is the respective Resilience Act, which will take care about data protection, transfer of data, guidelines for infrastructure that can be put into the cloud. There are a lot of things that's actually coming together. The partnership, the regulatory framework, existing infrastructure that is, as I said, transferred from existing partners to Google Cloud, but also new business area that we would like to jointly evaluate with our great partner.
Okay. Rocha, can I turn it to you? I'm going to turn my seat around so I can actually see everybody. That would help. Welcome to the Exchange panel. Maybe in the future it will have to be renamed the Exchange and Data, or Exchange and Big Tech, or Exchange and Cloud. Who knows, something else, but we'll come to that later. But it's very exciting to have somebody from your part of the world in this discussion. Can you just walk us through, at a very basic level, again, high level, what you think Google can bring to an exchange?
So thank you, firstly. It's really nice to be here in our industry background and spectrum. So I think, firstly, I come from capital markets. I came from the industry, and then I joined Google more recently, the last few years ago. Cloud means a lot of things. I think, as Michael mentioned, it starts off with infrastructure, right? So it's really about giving you a means to have elasticity in an environment where you can scale very quickly and get a very secure infrastructure, so you can start to innovate and create newer and better products. So that's number one. The second is really about using your data. And how do you empower yourself in creating value out of your data and innovating in that space too? So Google is a data company at its core. And one of the things we've really invested a lot is infrastructure that allows you to empower your data and scale out more than anything. So when we started out as Google, the infrastructure didn't exist to what we needed it to be. And so we built a lot of this infrastructure and technology. So what we bring to the equation is a very differentiated form of thinking. And it's about utilizing our services in the way that Google uses it to solve various problems. So when many of our partners and customers often think about how would Google solve this problem? So that's what we bring to the equation in the cloud space, which is using these services. This is a different way of looking at the problem. This is a different way of utilizing your data. This is a different way of elasticity-wise computing and scaling up based on operational need and testing different things, so you can actually innovate much more faster in our ecosystem.
And I know from you and I talking beforehand that you were at London Stock Exchange Group back in the day. So it's not like you're from outer space here. You do come from the exchange environment. You know the exchange environment quite well, very well. But I think also you made the point that was, and of course there is a partnership that LSEG has with
Microsoft.
Microsoft. Yeah. And they've got Refinitiv, which is very much a data engine, shall we say. All exchanges are about data. Can you unpack for us what is the cloud? Unpack for those of us who are not fully on top of this, data and the cloud. How do they work together, and why does that matter to an exchange?
Sure, absolutely. I think I just want to also mention, like, I was at London Stock Exchange, but most of my career was at Goldman Sachs and Morgan Stanley. So I really looked at things from a market participant and a sell-side perspective as well. When we think about infrastructure and we think about data, for example, typically we really look at data as an asset, and some people call data the new oil in various contexts, right? And what Google's pretty much done with all of its data, as you can imagine, we started off as a search engine. So as Google kind of matured and you really utilize, how do we take that data and analyze it more and more? So in our suite of products, we have products like a very large-scale service, which is a data warehousing service called BigQuery. And it's about taking lots and lots of data. And what I love about this service particularly is that as you put more and more data, based on how we've scaled, we've solved a problem quite uniquely and innovatively that you can actually go and get results much, much quicker. So the more data you put in, the quicker you can do it based on the designs that we've done. So in capital markets, and especially in exchanges, you're sitting on a lot of data. You're getting all these market matching. You've got all this transactional order data that's flowing through. Additionally, exchanges have been in the space where, from our understanding, that you take your order flow and you're really doing using data more for reporting purposes. So there's a lot of opportunity there, and I'm sure the panel will talk more about them, about how you can utilize that data in lots of other means. Outside of just reporting purposes or even enhancing those reporting means. And that really requires various tools and services that we make available in the cloud. So the cloud is not just about, hey, here's your data, go and analyze it in a database. It's about how do we take that data and how do we apply lots of other services that come with it. So those services could be around how can I analyze it with machine learning and AI. We have suites like products like Vertex AI that let you do that. How can I kind of transform them in real time and apply different logic to it? And we've got services like Dataflow that let you do those kind of services. So with cloud, you've got a whole list of services that can enhance and basically utilize your data and create newer products, better products, faster, and deliver them much quicker in a different way. So that's one of the unique propositions of cloud, and especially Google Cloud.
So if I'm a shareholder in Deutsche Börse, or a shareholder in CME Group, or in NASDAQ, or in LSEG, would I be correct in thinking that the advantage and the accretion and the value creation from having this kind of arrangement with a Google or a AWS or a Microsoft is speed to market, more efficient use of data, and all that at a high level? What would be the sort of low-hanging fruit in all of that? Again, if I'm thinking I'm thinking of, and all businesses have to think about their shareholders, obviously. Where's the low-hanging fruit in all of this?
Yeah,
on a
sure.
sort of year, 2-year basis, let's say.
So there's quite a few low-hanging fruits. So firstly, we're in this space to really empower organizations like you guys in basically accelerating your business and technology. So one of the ways we do that is around, like, how can we take your applications that currently run on-premise, so in your data centers, migrate them to the cloud, and when you migrate them to the cloud, you get a lot of efficiency. So firstly, when you have them on your on-premise infrastructure, then you're sort of owning that. It's a lot of CapEx and investment going into maintaining that. When you move it to the cloud, it's more OpEx based. And when you have it in that sort of a model, you get a lot of other sort of services. So the low-hanging fruit there is that once you put them into the cloud, you can utilize various different products that are already available in the cloud. So these are open source services. There's various different toolkits of services. You can do lots of machine learning very quickly. Like if you wanted to do machine learning on your existing set, on your on-premise servers, then it can get a bit challenging because you need a lot more compute, because you have to do a lot of calculations. So there's a lot of, the low-hanging fruits are really around taking some of those applications that you have, and when you start to migrate them, how do you modernize them? How do you extract more insights out of them? And how can you kind of build and create better versions and faster releases to your applications? And that's where the benefits start to reap through.
So, Philip, I'm going to turn to you because I want to make sure that you're well within line of sight and you're fully participating here. You're the consulting voice on the panel. Having listened to Michal and Rochak and talk about their perspectives on this, how do you see that? And what would you be saying to people, would-be clients, about use cases, for example, for the cloud in the exchange space?
I mean, Jeremy, as you described it, data is the new oil, but there's an important difference here, right? You take the oil, you pump it out of the ground, and it's basically valuable. With data, it's a bit different. You actually need to activate the data, meaning you need to find applications that actually make a difference. And many people ask for the low-hanging fruits, creating efficiency. We've run many different business cases, believe me, and if you just look at cost and efficiency, it's always a tough calculation. Yeah? So you need to look very closely, can you actually make that beneficial? But if you open up the door, think a bit wider in terms of innovation and how you can accelerate, yeah? Bring new tools to bear. That's really where the true value lies in transitioning to the cloud. And coming to your point, what we also see is that many people say, we have all of this data, let's put it on the cloud, and magically it's being activated and being useful. And in fact, it can also prevent you becoming more innovative if you don't carefully think about which data are you actually taking to the cloud. What's the purpose behind it? What are some of the use cases? And of course, in finding those use cases, you don't do it on the drawing board. You need to be close to the customer. You need to talk to your most important customers and find out, thinking from the strategy, what you're trying to offer to them. What are some of the use cases? What is the data you need to enable those use cases? And only then will you know what are the key data products that you need. So it's starting from your strategy in the customer, taking it to the use cases, to the data products.
Right.
So it's not really, I mean, in a way it is an infrastructure play, but at the end of the day, it's all about innovation and making you more agile and more customer-centric.
Okay. I want to give Roland an opportunity to talk about the NASDAQ perspective, because you've obviously had this deal partnership with Amazon Web Services since November 2021 when it was announced. What's the NASDAQ perspective on use cases and so forth?
Yeah, absolutely. And I think we take a slightly different approach to what Michael talked about. What we've done is, and we've actually worked with AWS for 10 years to work on our cloud offering. And we've taken our first matching engine to the private cloud. And in terms of data points, if you think about pre-pandemic, on our markets, we had an average of 30 billion messages a day on our heaviest markets in the US. During the pandemic, GameStop and the recent volatility, we're up to about 85 billion. And really, we see cloud and the ability of elastic compute is a fantastic phrase. It's a great phrase, but the ability to use elastic compute and what cloud providers can help us is we're preparing for a world of 180 billion to 200 billion messages a day. And as you see through the peaks and troughs of volatility, that kind of elasticity is needed, because it'll be quiet, and then all of a sudden you need to scale very quickly to deal with that message traffic. So we see the journey to the cloud is taking the core of the markets, but also as it's creating a platform and an ecosystem for our traders, our members, our data consumers to build their own use cases and applications on that. And then on the post-trade side, we look at that as real-time clearing and the ability, and we're helping one of our clients, the Options Clearing Corporation of Chicago, to go cloud-enabled with a real-time clearing engine. So essentially, it can calculate on spec all of its margin and positions at any point in time. So we see cloud as a fundamental to the transformation of that, not just pre-trade, but post-trade, and also the ancillary services there.
What I'm hearing is that the last 10 years has been about a massive acceleration in speed of everything. HFT emerged in about 2008-9 in a meaningful way, as I recall. And technology has made things, data processing much, much faster. This sounds like a quantum leap, which then leads me to ask on the client side, trading side, and perhaps Christoph, you can address this. Are you ready for this kind of quantum step change in processing, trading speed, data, analytics, real-time clearing, which is an astonishing concept, actually?
So when looking at the success story of a trading desk, sophisticated trading desk, it's a combination of technology on the one hand, but on the other hand, still human trader skills on the other hand. And the combination of both really makes it powerful. So looking at our biggest budgets we have on the trading side, it's about investing in technology. About 25 years ago, we've been trading in the open outcry market, and in a very best case, you've had some electronic support when stock prices were displayed. Nowadays, it's really about trading in microseconds. Low latency for us is a key topic. You mentioned electronic liquidity providers, high frequency traders, trying to benefit with part of their strategies from figuring out whether big orders are in the market. And for us, technology enables us to deliver best-in-class execution to our investors. And data, that's what I absolutely can echo what Philip mentioned. Data is the kind of, call it new oil, new gold, whatever. And clearly you have to differentiate on the one hand between raw data. We are not just hunters and collectors. It's important for us to have dedicated use cases. For us, it's really enriching this data, making use of it as part of analytics when it comes to price discovery, when it comes to figuring out where at this point of time are the best accessible pots of liquidity we can trade large orders against. And therefore, data plays a key role, technology plays a key role, and in this context, cloud obviously is also essential because at the end you have one data lake, you have, so to say, one golden source you access for all the variety of applications you have. Is it that portfolio managers make use of this data? Is it that traders make use of this data? It's really key to have one source where all your data are feeding in, and you don't want to have tons of databases. You have to access in very complicated ways.
Two more questions on cloud for the panel. One, there's a regulatory angle potentially here, or market concentration perhaps. There was a report from the Bank for International Settlements in July 2022, last year, that growing reliance among financial institutions on cloud computing software supplied by a handful of big tech companies could have, quote, systemic implications for the financial system, unquote. I'm just going to throw this out. I'm not going to ask a particular person to address this, but step forward and give us a view on where you think the regulators might be on this, or whether they might not be anywhere really on it.
No, I mean, you touch on a very important point, right? And we are in an industry, and of course there are also other companies, we are systemic relevant, and hence everything what we do, I mean, needs to be from an infrastructure point of view, or there needs to be a good response to the question of redundancy at the end of the day, right? And I mean, we are all monitored and audited by the ECB, by the Supervisory Authority for Exchanges, by the Bundesbank, and so on, of course, and they look at these things, and by BaFin, of course, when it comes to our clearinghouse and CCP. And these are very important topics, and I think we have all seen that all of a sudden one day we come into the office, I think it was in the last 6 weeks, everybody who uses Outlook was no longer available, and then we see, as Outlook is also, I mean, put into the cloud and run and managed via the cloud, and then you ask yourselves, even from an operational point of view, as an exchange operator, I mean, how can I reach people if all of a sudden my email system doesn't work anymore? I mean, that shows already, to a certain extent, an area where we need to carefully look into it, despite the fact, I think, where everybody agrees about the enabling function, the efficiency function, the innovation function, but I mean, how do we create redundancy and robustness?
Yeah. And then the second of the last two questions on this topic of data, of cloud rather, and again, I'm not going to direct this at anyone on the panel, but it is a question that has been asked a lot, particularly in the media coverage of this. Will big tech, move into the exchange space or become exchanges themselves? Who would like to take that one?
I'll have a stab at that. I think when you look at, and it goes a bit to the point about cloud versus on-prem, if you think about your outsourcing chain or the number of suppliers that you run as an FMI, and we've got clients all over the globe that depend on our technology as well as NASDAQ as a technology provider, you're always going to have critical suppliers to that technology. So, and the question is, do they have enough scale or interest or really business to move into our value chain? I mean, you must remember that we are operating in highly regulated markets that require a lot of expertise. What we've seen with crypto, and maybe we'll touch on that later, is that this explosion of crypto and digital assets thought, okay, we could reinvent the wheel here, that we could do this. We run markets with trust, integrity, investor protection, and that requires a very high threshold of experience in that. I'm not sure that our cloud partners are really interested or into getting into that kind of expertise. I think what they're interested in is helping us transform and leverage technology to maximize it. But it is a very specialized space we're in.
Well, I noticed that Rochak was nodding vigorously at most of what you were saying, so I will, without asking him the question directly, we will take that as him assenting to most of what you were saying. Good. Let's move on swiftly because we've got 18 minutes left to cover three things. We almost segue quite neatly into AI and machine learning. Christoph, you mentioned AI, I think, or machine learning before. A JP Morgan e-trading survey recently asked which potential developments will have the greatest impact on the markets in 2023. This is obviously pre-SVB, pre-Credit Suisse, pre-everything else. But the top answer was AI and machine learning, interestingly. So I want to just use that as the starting point for some discussion around that. Let's go to the buy side, actually, in terms of AI and machine learning and how you see this being used.
Yeah, more than happy to step in, Jeremy. We mentioned before, looking at data, on the one hand, you have the raw data, but on the other hand, it's really about use cases. What is it, what we make out of this data? How do we enrich our trading process? And that's exactly when it comes to artificial intelligence, use of artificial intelligence. We have on a yearly basis 300,000 plus transactions across asset classes, cash equities, fixed income, FX derivatives, and it's really about finding at the exact moment the best sources of liquidity. And in this context, obviously we can make use of historic data, historic prices, where in certain bonds of the variety of 100,000 bonds we trade, do we believe there's the highest likelihood that we get the most aggressive prices, which enables us to deliver best-in-class execution. It's exactly the same decision when it comes to execution of cash equity transactions. Which broker do we use to access which type of market right now when we have large orders, when we have very small orders, where we have a very high level of automation. So point number one in the process of price discovery, point number two in the process of selecting the best execution strategy. That's from our perspective a perfect use case for artificial intelligence.
For anyone else who wants to address this, we've seen recently what ChatGPT has done to cognitive creativity, shall we say, with words, for example. Looking at machine learning in your environment, in trading and the exchange environment, where is there left to apply this, where you're going to see in the next 12 months some really interesting discovery, do you think? and application.
So I might, from a NASDAQ side, we're actively deploying that. So in two areas. One is order type. So we are deploying an order type that has a dynamic interval. It's a midpoint order that uses machine learning to calculate the optimal interval to execute. So it extends the life of that. And then secondly, when we list option strikes, we're using machine learning to evaluate what's the most efficient strike and number of options to list based on all the data before. So I think you see incremental applications of these in
Right.
very specific technologies. But in terms of ChatGPT, I see great possibilities in terms of productivity and in terms of, from technology side of things, how we go about doing things as well.
Yeah.
I think it's probably the question of what was outlined here, also the robustness and correctness of data. We have also seen with this chatbot, I mean, that you can also easily manipulate the outcome, right? I mean, it's the question what type of data sources or manipulated data sources this chatbot has access to. So as long as the respective data is to a certain extent protected, shielded, and robust, I think it really qualifies also for our business. And here, certain kind of use cases were mentioned. We, for example, use, as you mentioned, the kind of the trading layer. We use it in the post-trade layer, just as one use case, where we can predict, based on the respective data, settlement success or actually failure. So really that is predicted based on the instructions that we receive from different market participants. And I think that makes sense because you have, as I said, a protected data set on which, I mean, the respective prediction can be calculated, right?
So AI has helped you with settlement prediction.
I would not say settlement failures. We send it out actually to the market participants who instructed settlements, which ones will be, from a predictability point of view, in the next 2 days or the day after, successfully settled and not successfully settled.
Okay,
Yeah.
interesting.
If I could
please.
just add to that, which is that within the cloud, you have a lot more tools to actually do a lot of these machine learning elements of it, and services that allow you to. So, firstly, when you start applying machine learning and creating and applying it to software, it's more than just, hey, I've developed this machine learning model. It's a neural network. It lets me predict X, Y, Z. It goes further than that. It's about how do you continually learn based on your data changes? How do you adapt to bias or drift with your model? And having those tools in place is so important when you're actually applying machine learning and AI in organizations. And that's worth seeing with cloud, because cloud lets you do that with many of the services.
Okay, let's move on to, did you want to say, sorry?
Yeah,
Please.
Just a quick comment on OpenAI. Of course, we've been working with OpenAI a lot recently as part of our alliance. And if you take a step back, I think it's important to distinguish that there is this human-machine interface aspect to it. That's one application for AI. And then on the other hand, there's of course the autonomous trading element to it, which is entirely different. And then there's stuff that is happening somewhere in the back office you don't even notice, about fraud protection, and it's actually quite different. But if you ask me sort of what is the most surprising thing where we see unexpected developments, it's actually that interface between human and the computer and the AI, how they interact. And of course, the reliability of some of these technologies, hallucinations and such, is not outstanding, but it changes the way how you interact with AI. And that's, I think, where the new insights, where the new use cases come from. Because the technology behind this has been in place for some time now, but it's really about how you actually make use of it. And that's, I think, what's going to be, that's one part of why AI is going to be so influential. It's not necessarily the stuff that's happening in the back, but it's really what's happening at the front, customer facing, working with the traders, and basically creating something that is both human and AI at the same time. And that's, I think, really the most exciting thing about it. And as a side note, the engineering challenges in integrating such a chatbot technology and doing something meaningful in the trading context, in a regulated context, are immense. Yeah? So you just can't take the technology and make it work. There are actually a few things that need to be in place for you to successfully make use
Actually,
of this.
that's very interesting. You maybe just think of one quick question. I want to say two things. Ask a question, and then just before that, I will say thank you for the questions that are coming in. I am reading them, and I'm going to ask them at the end here. So my quick question is, it just strikes me, actually, listening to you, there is an enormous demand for talent, for people who know how to do this stuff. Is there the talent out there for this next phase of all of this, cloud, AI, machine learning, whatever it may be? Are you finding the people who can do all this? Anyone? Maybe Rorschach, I mean, from the Google perspective. Do you have people walking in the front door all the time with brilliant qualifications? Or because we're now entering a new age of this, and we're going to need the people who can do all this and scale up.
Yeah.
Can exchanges, have they got the people? Can they find the people?
Yeah, I think that the demand is really there. I'd pass to my panelists to really talk about the exchanges and how you see the demand, transpiring, but there's definitely need for that type of knowledge and expertise.
I think it's relatively simple. I don't know whether you share that. And I mean, you have that experience, I think Bain, and probably also here, Union Investment has this experience. I mean, what we simply see is that local or regional talent pools are no longer sufficient. So you need to fish in the global talent pool. And I think therefore we have also expanded our sourcing strategy. And I mean, we have all partners, not only here in Frankfurt, but outside of Frankfurt in other regions of Europe, but also globally. Would it be in the US, India, or at other places at the end, yeah, or Philippines or whatever, yeah. And I mean, it's the question where the talents are, yeah.
Yep. Okay.
I would make the one point, which goes back to OpenAI. What technologists, I think what a lot of smart technologists did in the last 10 years was, rather than go proprietary technology models, go open source models. So open source allows you to develop communities and engage in ways where you don't need to be part of a club, you don't need to be paid, you don't need to be licensed. And that, amongst the younger generation of technologists, is tremendous, because you're almost developing, and when you talk ChatGPT or that kind of thing, when you look at who's actually playing around with it on your computer, I'm pretty sure a lot of people in this room have played around with it. So, but that kind of open AI and the ability to open source and play with that technology, that in itself means that you're continuing to develop that pool of expertise.
Yeah, that makes sense. Let's quickly deal with crypto, digital assets, blockchain, for example. We don't have much time, and then we want to move on to cyber very, very quickly. So, we've seen what happened with FTX. We're in a kind of a crypto winter, if you like. This slightly reminds me of what happened after the flash crash in 2010, when I would sit on these panels or I would moderate panels, and exchange leaders would jumped into the opportunity to talk about how they were trusted market infrastructures, because look what happened, all these terrible HFT people and algos and everything else, which of course they then turned around and embraced, hence Colo and everything else. But there was a time when there are periods in which exchanges and market infrastructure providers find the world turning to their advantage. And it seems to me this is one of them, again, where we've got this crypto winter. There's been an empowerment of traditional market infrastructure. I'm not saying this because I'm sitting on a panel, I'm moderating a panel for one of the exchange providers. It just seems to me to be self-evident. What is there left in terms of digital assets, blockchain, and the use cases that we look at and say, yes, actually this makes sense now that the dust is clearing, if you like? Anyone want to take that?
Yeah, we're very happy to jump in, Jeremy. I think Crypto Winter made pretty clear what we are talking about when looking at digital assets. It's about technology. It's about infrastructure. It's about creating efficiencies. It's about creating new processes. So take crypto on a standalone basis. We are talking about assets worth $1 trillion. Bitcoin, Ethereum, and co. Just look at the market cap of Google, look at the market cap of Microsoft. As a standalone company, these guys are bigger in terms of market cap than the entire crypto market. So just to bring it in context when purely looking at Bitcoin and co, what we are talking about. For us, the real game changer is looking at infrastructure, looking at DLT, looking at blockchain. What can it bring to financial markets? Look at a simple process in fixed income from issuance to maturity of a bond. So despite the fact that we in the financial industry, I guess we are considered as innovative, that's still a process where you have the impression pretty old-fashioned. So typically you have a syndicate placing the bonds. Then question is, do you need by definition a syndicate? Is it not, as we did with a Siemens digital bond we traded most recently, is it not also a use case to step directly in contact with the issuer, create savings, better yield for our investors? Point number one. Point number two, we talked about data. When a bond is issued, how do I get static data into my systems? Today it takes up to 20-25 minutes for one issuance to get all the data in your system. Going forward, DLT, distributed ledger technology, you might have a golden source, you have an API, you grab the data, you have it in a couple of seconds in your system. Looking at the payment process, when issuing a bond nowadays, typically you have T+5, T+7, so delivery versus payment, meaning the issuer has to wait for 7 days getting the cash in. When talking about DLT, when talking about efficiencies, we focus on instant, on atomic settlement. So you don't have 7 days, but you just have a couple of hours, maybe just a couple of seconds. And that's what a combination of, on the one hand, digital assets, on the other hand, what's clearly also required is a wholesale CBDC, central bank digital currency, digital euro, digital dollar. You don't want to settle in stable coins. You don't want to settle in investment bank coins. You clearly need a CBDC to create these efficiencies. Making use of smart contracts when it comes to coupon payments, when it comes to corporate actions in the equity space, like a spin-off or rights issue. So these are all use cases where we can markets significantly more efficient going forward, not more efficient just for the sake of making life for the buy side or sell side better, but at the end, we are a service provider. We have investors, we have a trustworthy function for them managing their money. And at the end, it will also it will be also a better outcome in terms of performance by creating all these efficiencies. So, therefore, from our perspective, when talking about use cases in DLT, when talking about token economy, clearly a game changer for the industry. So looking a couple of years down the road, which will change the whole ecosystem significantly. You have to question the role of the one or the other intermediary in this system going forward. And it also underlines that it's clearly required combination between traditional finance industry on the one hand, exchanges, asset managers like us, and on the other hand, technology know-how coming from firms like Google. So that's for me the key success factor going forward, the combination between TradFi, traditional finance, and on the other hand, technology companies.
Michael, can I ask, what's the Eurex perspective on this and sort of bringing the adults back in the room on this whole crypto, DLT, the blockchain argument?
I can only agree what Christoph outlined. I mean, fundamentally, I just think that when we look at FTX, the point of departure was that there was no customer segregation, what we learned in the media. There was front running, I mean, different interests between Almedia and other kind of trading interests. And I think exactly as you outlined, these are the safeguards that, I mean, are implemented for a long period of time in regulated markets, number one. Number two, now with regards to the technology, I think blockchain and HQLX, they always have their kind of right to exist as long as they provide efficiencies, yeah? And they do. And I think we have seen that also in our organization, another post-trade element, and you mentioned that, Christoph, for structured product, it's called D7, where we have digitized structured products, and that means at the end, we needed, I think, 3 to 5 days from the product idea to the issuing of the structured products. Now it takes us probably a single number of minutes at the end, so between 8 or 9 minutes. So that is a real progress. It creates efficiency for us as an operator, but more importantly, for our customers who are onboarded on this platform. So we believe in this technology, and we just believe it will be an evolutionary process as long as it provides additional efficiencies. On the digital assets, as you might know, and I mentioned that this morning, we have announced this morning that we will actually also offer digital assets a future on the FTSE Bitcoin index in a regulated environment here by Eurex and Eurex Clearing on the 17th of April. And we believe in a regulated environment, there's a right for existence, and to be seen how the market acceptance will work. But we see encouraging feedback from the market with regards to liquidity providers and also flow providers. But the proof has to come when we launch.
Very good. We are running up against time, so I want to move very quickly, and I want to just get a very, very, very quick touch point on cyber resilience, and then I'll go to I have 3 questions here. I'm going to rattle through them, and hopefully we will not bust the measure here too badly. Cyber. The attack on ION, it's well known, it's in the public domain. What are the lessons? What are exchanges doing to bolster their cyber defenses? What was the wake up? What was the lesson here? Roland.
So I think that the number of attack vectors and the number of incidents and the sophistication of these attacks are increasing. And it's not just from an exchange infrastructure or clearinghouse infrastructure, but it's also the ecosystem in terms of the participants. So in terms of the investment, leveraging our partners, whether it's our cloud partners and their expertise in dealing with cyber, but also your own expertise and being able to understand your playbook in terms of understanding where the threats to your system are. It is a constantly evolving space where you've got to put more and more investment into that. So absolutely, it is front and center of what we take seriously.
Philip, do you think that market exchanges and market infrastructure providers are sufficiently on it?
I think when we talk about cybersecurity and also resilience, we mentioned it earlier, it's really about the ecosystem and how different players come together as part of this value chain. And of course, it's a question of what is the weakest link in the chain. So bottom line for me is, for all of this discussion, as we talk about the cloud, the data, and the AI, it's about building ecosystems of capabilities, which also means resilience and cybersecurity is about extending that idea of security and resilience to a broader set. It's not just the firm, but it's really how you collaborate. Yeah. This also means you need different operating models and frankly, a different mindset to really understand where are the threats, because they might not be with your company, but they might be with your partners.
And that's where big tech can come in, right, Rojak?
Yeah, exactly. And I think it's worth knowing that when it comes to Google Cloud, where we believe in a shared responsibility, shared fate model, where we share, we basically provide you security off the cloud, but we're giving you the tools and services, the locks, to basically enable you to be as secure and resilient as possible. There's one more data point I want to just mention, which we're all very proud of, is Google Cloud just recently announced that we've made it into ISAC, so Financial Services Information Security I think it's analytic services or something similar, ISAC, for the service providers. We're the first cloud provider to be on that, which is a really big accomplishment for our organization to be in security and providing that resiliency for the whole industry as a whole. So,
Yeah.
I think what we have experienced with regards to ION event is, I think fundamentally, I personally believe that exchange operators and also clearinghouses have quite a robust strategy and also implemented security IT standards. So when it comes to protect, detect, and then also respond and recover all these principles, we are audited by the ECB, again by the Bundesbank and by BaFin, and they're very strict, and they should be very strict on this very important, sensitive topic. But I think, and this of course affects in particular the shielding of the company itself. But I think what we have probably underestimated and had not really on the top of our radar was simply what would happen if our market participants are impacted. And I think that happened with ION as a middle office and back office provider, margin calculator, and all of a sudden you see margin calculation is no longer working. And if the margin cannot properly be calculated, it has directly impacts on trader limits. And if all of a sudden the flow is impacted that comes to the exchanges, our core function, the price formation, is negatively impacted. And I think that is where we need to really look at. And I think also a CFTC task force has been now set up. It's also discussed in the Futures Industry Association in different committees. One potential outcome, of course, could be for exchanges, understandably, and clearinghouses, but also for the banks and other market participants, if they onboard these type of vendors, that they have to define security IT standards before they are simply allowed to onboard them with their respective products.
Okay, great. I've got some questions here, rattling through them, and they're not unrelated to what you've just been talking about. Number one, are there any security concerns in moving to the cloud, and what sort of defense mechanisms and/or fallback and disaster recovery mechanisms might need to be invested in?
sure, there's a lot of documentation around what the best practices are. I'd like to re-emphasize we believe in a shared responsibility, shared fate approach, which is we help you side by side in solving for security and baking that in terms of making you successful. But lots of information online, or reach out to me offline and I'm happy to help you.
Okay, now, final question. Real-time trading will require guardrails. Will they need to be tighter as a result? Anyone?
Sorry, what was
Real-time trading will require guardrails. Real-time trading, okay. Will they need to be tighter as a result? I wonder if that means real-time clearing too.
Yeah, I think real-time trading has very quite a deep set of regulations around it in all markets, both in Europe and the US and globally as well. I think in terms of real-time clearing as well, it's about, a lot of it is about getting the right data and to risk managers and understanding the right information at the right time. It's not being swamped by data, but it's about letting investment analysts, traders, and risk managers make the right decisions.
Okay, you can probably hear the background music has been cranked up, which is their sign that's really we've busted the measure. Thank you so much to what a great panel. Thank you. Bye.
Thank you, Jeremy.
Thanks, Jeremy.
Thank you.